G'day, James. James Juers from Brock Commercial. Now, I believe you are the Director of Corporate Advisory, James.
Absolutely, Greg. Great to be here.
Now, what actually do you do?
I get involved in all commercial and industrial property, sales, leasing, valuation work and advising clients of the best way to handle those assets.
And in a 1-second snapshot, what are we talking about today on Open House?
The commercial property market and some of the differences between that and residential.
Really looking forward to it, James.
Absolutely.
Welcome back. You're watching Open House, and as you can see, I'm joined by James Juers. Welcome, James.
Thanks, Greg.
Now, your role is Director of Corporate Advisory for Brock Commercial. What actually do you do, mate?
That's a very good question, Greg. Basically involved in sales, leasing of commercial property, advising clients on the best way to handle those assets. Should it be leased? Should you buy? How to deal with investments and that type of thing in that sector.
Yeah.
Yep.
Now, James, I'm not giving away your age, but you've been in this industry for a fair while. Mm-hmm. You would have seen some highs and lows over the years.
Absolutely.
Whereabouts is our market placed at the moment, our commercial market at the moment?
Yeah, we're going through a real interesting phase right now. We had a very slow period for the last couple of years. Transactions were down considerably. Mm-hmm. But I think we've seen since the election, whether that was the catalyst to make it happen, we've seen a lot more activity in the market. Buyers are a little bit more confident, or some of the vendors are saying, okay, things aren't going to get as bad as we had thought. We thought there was going to be potentially blood in the gutter, so to speak, but things have been a lot better than we anticipated. Our auctions over the last 2 or 3 months have been outstanding results for our vendors over reserves, and there's some good opportunities there still in the market for the buyers as well. So it's quite active at the moment.
No wonder you got a big smile on your face as you bowl around our office, mate, and it's nice to see it.
Absolutely.
Hey, we talked to Will Chapman a little bit later on the show, and the correlation between interest rates and residential market can be quite strong. So as the interest rates have been sneaking up, and we're at a point now where it could start affecting our market if they continue to grow, is there a strong correlation between interest rates and commercial market?
Yeah, that's a really good question, because it's not that same correlation. It doesn't affect it, yes. I think commercially we are more influenced by confidence in the marketplace. So the interest rates could take it, not that we want it to, but could go up 1 or 2%. Yeah. But as long as the market, everyone's confident, people will keep leasing, they'll keep buying, they'll expand. So if they're expanding, that's good activity. So we are not as sensitive to interest rate rises as perhaps a residential market might be.
Is it easy for you to explain to anybody watching this show the key differences from an investment point of view between investing in residential and investing in commercial?
Yeah, look, that's a common question I get, Greg. I mean, there are major differences. One of the big ones that we like to talk about is the fact that when it's a commercial property, typically you get your rent plus the outgoing. So the tenant pays your council, your water, your sewer, your emergency services levy, and in some situations your repairs and maintenance. So there's a big, that's a big
I can see residential investors going, how long has this been going on for?
Absolutely.
One of the biggest bugbears, I think, from residential is the continually, sort of improving the properties or keeping the maintenance of a property.
That's right. I mean, the capital nature of things like your roofs and so on, you still have to look after, but internally it's typically the tenant's responsibility. There are a lot of other differences. I mean, typically a house, you will, on a residential property, you'll choose it for a lot of emotional reasons, quite often. Obviously, affordability comes into it. Whereas commercially, you look at the utility value of it. How can my business operate in this particular property?
Is that true for all properties, or do you sometimes get some emotional value into it?
Oh, look, you absolutely do get emotional value into it. I mean, there's nothing like a good-looking property that looks nice, feels good. You can drive past and say, "That's mine." There's a real value in that.
I can see that, particularly for offices. We're trying to build a team and have a really nice working environment. I get the industrial, a shed is a shed, I'm assuming. But for people that are trying to build teams in an office environment, I'd assume that the aesthetics of a property is still quite important.
Oh, it is, both from a tenant, an occupant's point of view, and also then the owner's point of view. And you find that a good-looking property will generate more interest. It's all obviously price sensitive as well, but you're right, the good ones will attract the most interest.
How do you value a commercial property? I believe, and I don't know a lot about it, but I believe it's got a fair bit to do with how much money your incoming and the length of the lease, I'd assume, has got something to do with it. Is there actual sort of a ratio or...
Yeah, there's not a hard and fast formula, but it is based on the rental income that you generate from the property. Like any other investment, people are going to weigh it up: money in the bank, money in residential. What is your return going to be like on the commercial property? From an investor's point of view, in particular, what is your rental growth like? Sometimes, for example, the yields we've been seeing lately, yield being the return, the rent return versus the value of the property, cost of the property. We're seeing those range anything from 6 to 8.5%. Depend, and the differences relate to what rental growth there is, the strength of the tenant, as you highlighted, the length of the lease. A good long lease, someone will say, look, that's fine, I'll take